We are live here in San Francisco at the House of Web3. It's a beautiful day, and I'm here with Jay.
Hey,
How are you doing today?
good. How are you?
I'm doing great. I'm
Beautiful day.
really excited yeah, the drive must have been
Yeah, it's great.
incredible. Really excited to hear more about your journey, hear more about Sidepit. So I guess my first question is just tell me a little bit about your background. And yeah.
My background, yeah. So we're in San Francisco. I'm originally from New York, from Brooklyn, New York. Grew up in the 80s and was first introduced to financial markets really young because I was kind of born into it, right? And the two things that I really got into really young was like trying to predict the markets and
Mhm.
also computers were coming out, right? In the mid to late 90s, and I got really into software engineering. And that was like my thing for a long time. I'm also into sports. I have a family here in California. Moved out here mostly for Bitcoin in 2013.
Mm.
So yeah, I've been a coder, a scientist, a computer scientist for many, many years. And this is like, I think my third startup starting up. So yeah, it's been an exciting journey. Never my wildest dreams did I ever think crypto or something like Bitcoin, would happen. It was like such an amazing thing. And we're talking almost 15 years ago by now, but it's still an amazing experience to go through the whole thing.
I'm sure. I mean, it seems like you've been involved in some sort of crypto blockchain since for a very long time.
Yes. So since the beginning, it turns out my claim to fame is I was the first to tweet the Bitcoin ticker symbol.
Okay.
Yeah,
No
BTCUSD.
way.
Yeah. Um, so I was working at Fortress, doing coding, C++, high frequency trading for Wall Street. And when I left that, I was kind of, looking for something else. I decided to start over and I built my own computer. I built my own, I installed an operating system and I'm trying to overclock my CPU, right?
Uh-huh.
And I go to this forum, overclock.net, and I see this like closed post about Bitcoin, that we don't talk about that here. We're not sure what it is. And it looked like something from Twitter in like 2020. This was back in 2010. It was like drama. I'm like, what is this? Wow, what's going on? And then I read the white paper, I compiled the code.
Huh.
And at that time my startup, I was doing trying to like AI type of stuff, but it was like trading algorithms and I was tweeting gold, soybean prices, and I just added Mt. Gox feed, and that's how, you know, I
Wait,
ended
what
up
did you add? You added what?
the feed from Mt. Gox
Oh,
of
okay.
Bitcoin. Yeah.
Okay.
So it was the startup was this. It was instead of looking at your charts all day, we're just gonna tweet every time a relative high or low happened.
Mm.
So new high, new low.
Okay.
So that's why the first tweets like Bitcoin $12, new high.
Whoa,
Yeah.
okay.
Yeah.
Wow, you go way back.
Yeah, I go way back. One of my first posts on Bitcoin Talk was, we already started talking about $1 million back then.
Wow.
Like the people that understood computer science and finance, like there was very few. But we were like, wow, this is really something.
Wow.
So yeah, it blew me away right away, and I was definitely all in. Mostly from the technical side, like piece of software that solves a problem on its own without like a business model or management team around it, was just amazing. And then everyone just went to work trying to find the next, what else can we do with this technology? And yeah, that's what I've been doing ever since.
Fascinating. And I'm just curious, so you discovered this new thing
Right.
and you saw the potential in it. So, and what was your next step? What was your involvement right after that? Like how did you continue with that?
Yeah. So, for the 10 years before Bitcoin, I was coding, charting.
Mm.
I was basically a crypto pro, before there was no one else. I thought I was the only one. But then I started going to conferences, right? Meeting new people. I was at the first conference here in San Francisco. I was at all the initial conferences back in the day. I think what's it called happened then? It was Occupy Wall Street. So there was remember Occupy Wall Street was like a movement.
Mhm.
So it kind of coincided with the beginning of Bitcoin. yeah, and I started making, friends online, Bitcoin Talk, analyzing ideas. It was like this great community of really open-minded, really smart developers in Miami. This is Vitalik was there. All the initial founders were there of all the new protocols. And although there was a lot of debating, it wasn't like toxic like it was, like it happened. There wasn't a lot of fighting. It was a lot of debating. There was a lot of analysis, discussions. This is all brand new. How's this going to go? How's it going to evolve? One thing I did know from my time in financial markets that I knew how long it would take for the general people to grasp. And I realized as each new cohort grasps it, the price will keep going up.
Mm.
Um, and it's going to take a long time. So I did expect the ups and downs, which is why nobody from back then is a multi-billionaire because, when things drop 90%, right? It just, unless you've lost your wallet and got it back. And then, with all the hacks and stuff and exchange crashes. So yeah, I've been through the whole thing and, I made some mistakes. Ethereum fundamentally I had a problem with, and I still do, but I do realize, the parts of it that do make sense, the parts of it that were good, and the parts that aren't is something that, we're working to fix.
Interesting. And I'm just curious before we go on to, I have a lot of other questions, but you mentioned cohorts as they come on, price goes up. Where are we now? Which cohort are we in right now?
Oh, so right now, January 25th, something, right?
22nd, yeah.
22nd, 2025. So with the Trump coin, so it looks like we have a new people coming into Bitcoin, and it's a really weird situation because there's a correlation now to the stock market and to the economy, but I think we are going to break we're going to break that correlation, and Bitcoin's going to really become gold, and it looks like we're looking for price appreciation, but I'm not going to say that until we got to break 108, then 113, and then we go to 146. Yeah. So
Interesting. Okay.
we're trying. But we're not there yet.
Okay.
Yeah.
Okay. All right. And any idea when that's gonna happen?
If we break 113, yeah, we're gonna go straight to like 146. So it is an if.
Okay.
Can't say when, but we almost did it 2 days
Yeah, I
ago.
saw that.
Yeah.
Wow. Okay, so I mean, it seems like you have a vast experience and have been involved for a very long time, and now you're building something really cool.
Yes.
And so, Sidepit,
Yes.
tell us about it.
Sidepit. Okay.
And also, what got you to like, what made you decide to start it?
Yes, that's an excellent question. So, okay, let me just say what Sidepit is.
Mm,
Easiest way to say it is SciPit is the first trading platform, the first digital trading platform to eliminate structural manipulation that's comes out of the transaction prices seen in both TradFi and DeFi exchanges. So there are three main groups that this applies to. So the first thing is SciPit provides a public good of what's called price discovery. You could think of it as a price oracle. So every asset, every industry needs a free market mechanism to create what's called a price discovery mechanism. And what this does is the public good, the external people, they get the price, in this case, Bitcoin, from something like SciPit. The second thing this does is for large institutions, hedgers or speculators. So someone who needs to trade, investors, someone who wants to buy or sell.
mm,
Okay. At SciPit, you could do that. You get the market price without execution risk. So today there's a fear of flash crashes. There's a fear of using exchange. In fact, institutions don't even use exchanges today. They use what's called OTC desks
mm,
because they're afraid of what's called execution risks, right? So Sidepit is going to eliminate these execution risks.
And how do these execution risks manifest? Why is there an execution risk?
Yes, it's a great question. So I'll explain it like this. Well, I'll go to the third one and then that will
Okay, okay.
explain it. So the third one are the speculators,
Mhm.
the price speculators. The act of gambling on the price of, let's say, Bitcoin, coming together, right? Betting on Bitcoin in an exchange environment creates the liquidity for those hedgers. Now, the problem is that these manipulators, these high frequency bots, these MEV bots have taken huge amount of alpha away from the speculators.
Mm.
And by us giving it back to the speculators, we're creating what's like a positive sum environment for the speculators to create the liquidity for the hedgers. Now, what's happened is with high frequency trading, for example, the people that have an advantage, right? If you're not first, if you're second, right? You're afraid as a market maker, you have bad reaction time, right? So you're afraid. So you have to cancel your orders. It's called order flashing. This is in the white paper. The, so the fact that somebody has an advantage creates everybody else to do something. And
Mhm.
what that does, right? Flashing that every once in a while, everyone's canceling at the same time and there's a flash crash. So the fundamental problem that we're solving has all these, you know, tertiary and secondary effects. And one of them is a flash crash. That's why I highlight it because it's something that just happens every once in a while, but there are mini flash crashes all the time. So what we do, and another reason is there's not a lot of time for these bots,
Mhm.
these machines to react. They could only just go on or off. They're very binary.
Okay.
So our solution, and then is that we turn machine time into human time. Pause time for a whole second, which is a long time, like 1,000 milliseconds, right? It's like 100,000 microseconds. It's a very long time, millions and millions of CPU cycles, right? But it's a second, right? We pause time for a second, we gather all the orders, and then we have a free market auction every second. This auction is a free market. At the end of the auction, it goes into the regular, central limit order book. So it's a free market on top of the free market. And this is the part where, think of it, if there's a flash crash, if Bitcoin goes from 100,000 to 5,000 back to 100,000, well, I want five, I want six, I'll take 70,000, I'll take 86,000, right?
Right, right.
And it just goes away, right? Because that's not real. That's not market. Now, what if COVID happened and that is real,
Mhm.
right? The machine can't know that. Only the human can know that. So by giving the human enough time to hit the buttons, right, we're able to differentiate whether or not it's a real crash or a
Mhm.
fake crash.
Fake crash.
And this is the speculators competing for this free alpha, right,
Mhm.
of a fat finger, let's say. And at the end of the day, those things, and it's funny because things like this have never happened before. So we have a whole generation of traders that have never experienced a real exchange.
Wow.
So the definition of exchange in the textbooks, number one, a place that creates price discovery, right? Number two, speculators speculating in an open, fair environment to create liquidity for the natural hedgers. That's the public good. That's why we consider this different than gambling. That's why
Wow.
it's special because they're actually doing a public good. So what we're doing is we're focused on the speculators saying, hey guys, what if we told you that all that everyone thinks trading losing money. Everyone thinks they're going to lose money, right? It's so obvious, right? If you trade, you lose. If you invest, you don't lose. That's the idea. It
Mhm.
used to be like, no, as a group, you should be making money as a group. Maybe most of you will lose, but as a group, you make money and you create a public good service for those that need to trade. So it's a symbiotic relationship. And then the rest of the industry gets price discovery, uh, an oracle, right, of price discovery.
Wow.
So yeah, that's
So that's what you guys call true price discovery?
Yeah, true price
Okay.
discovery or just pure price discovery.
Pure.
So
Wow.
what we're saying is that our protocol is as fundamental as Bitcoin is to money, ours is to exchange. Um, so the last time there was a real fair exchange was inside those trading pits. That's where the side pit comes from. Those
In
Chicago,
like. Oh, okay.
when everyone was gathered inside the same room, screaming with their, you ever,
You're talking about like the stock exchange, or you're talking
yeah,
about.
the commodity
Yeah.
exchanges or the stock exchanges,
Yeah.
right? So you notice we're talking, right? There's no Byzantine generals problem here because we're in the same room.
Mhm.
There's no speed of light delays,
Right.
right?
Right.
So that's, when trading went electronic back in the 90s, right, late 2000s, it created this delay and opened up the door for, we want to say manipulation, but that was the original, the high frequency.
Wow. Very cool. How is it different than other exchanges? Are other exchanges not offering this?
Yes. So it turns out that all the other decentralized exchanges, they they ended up decentralizing the wrong thing, right? So we're highly focused on decentralizing the matching engine and the price discovery mechanism, right? As opposed to everyone else is trying to decentralize the ability for the exchange to rug pull, right? That's the concept, the money concept, right? Where peer to peer makes sense, but when you have multiple people in a game, right? You can't have one of those people see the whole cards.
Mm,
And that's MEV,
mm,
right?
okay.
So how do we solve MEV? By just removing the miners. There shouldn't be anyone that gets access to create this, right? We have a new protocol. Um, Other people are doing this, but no one goes all the way, right? And we went all the way by starting from the focus on the core, which is creating the purest price discovery for the speculators. And another thing, the reason a lot of these manipulations exist is because of the obsession of making everything easy user experience. And that's what happened with AMMs
Mhm.
and even Hyperliquid has this right now with the validators. So it's been a long time trying to find like our core user base, right? Because it's complex, and we just found it. So AI agents.
Mm.
AI agents are the ones that are really clamoring for our APIs right now because to them, it's not complex at all. And it turns out AI agents could do everything except manage the execution risk and the slippage.
Gotcha. And so, okay.
Those are things they can't do. So when we like to say 4 out of 5, LLMs choose Sidepit, right? For their experience,
Nice.
right?
Nice, nice.
Because they understand the complexity. So what we're envisioning now are individual coders or
Huh.
individual traders with their agents, right? To could do things for them overnight. Hey, I'm going to sleep. Can you make sure, if Bitcoin goes to 113, Jay said to buy. So although I think it's going down, if it goes there, I want you to buy. So you give them like instructions that are like, used to have to code it, right?
Right.
But now the AI agent, if you look at the forums, people are like, I have this AI algorithm, right? It looks great on paper. Then when I trade it, I'm getting killed, right? That's slippage and fees. That's what they call it. Nobody really knows what it is. It's a black box. So we're saying that maybe it's not a skill issue. Maybe it's an exchange issue, right? It could be some of you guys could make money trading, but you've never had the opportunity.
Because other people are beating you with these flash, whatever, or.
There's physical advantages, physical time in centralized exchanges,
Mhm.
and miners or validators in decentralized exchange, right? So both of those extract way too much money. If you think of it, why would being first, why would speed have an advantage? The whole purpose of exchange is to be able to predicting price, right? But speed seems like it shouldn't be legal, right?
Mm.
It should be frowned upon. Now, this isn't new. What's happening in DeFi? This happened in TradFi with the high frequency trading. And it got to the point where Hein Bodek is his name. He had a documentary. It's on YouTube. So he is a whistleblower, and he went through the entire thing. And one of the high frequency executives said to him, they made a bet. He said, even if you document everything we're doing, right? You show that we've been like just stealing money from Wall Street for the last 5 years. I promise you, nobody would read any of it or care at all. And that's exactly what happened,
Whoa.
right? So he thinks it's because they were embarrassed or they're just too lazy, right? And that's what in the documentary said. And I think it's because there was no solution, there was no alternative. So what happened with high frequency trading is they realized that, listen, we can continue skimming as long as we keep it to a minimal and not go overboard. And
Mhm.
that's the state of event. That's the state today, right? DeFi, we don't have that idea that we're not going to go overboard, right? And they went overboard. Um, and you know, if you think about the difference today is that we're not starting a business. Okay, we have this nice science project, we're solving a technical problem. Great. But no, Sidepit is a business, right?
Mhm. Mhm.
And we're trying to make money and we're trying to, get users. And it turns out that those speculators, those traders, those day traders, the mid-tier ones, not the degens and not the 1000x or anything, but the traders that expect to make money, they have an innate feel and sense that this has been going on. And yeah, they love what we're doing and they can't wait for our public beta launch.
Interesting.
Yeah.
Sure. So tell me about Bitcoin layer two. And you guys, I've seen you guys kind of describe yourselves as Bitcoin layer two, Bitcoin layer two DeFi. Tell
Yes.
us a little bit about what that means.
Okay. So everything we just talked about is nice, but we actually have a product. We're in
Right.
private beta. So
Right.
we launched a Bitcoin layer two exchange for USD. What does that mean? That means you take your Bitcoin, you lock it, and now you use that same Bitcoin address to sign transactions, right? To buy and sell. What are you buying and selling? You're buying and selling the US dollar. And Bitcoin is the currency. So instead of $100,000 a Bitcoin, it's 1,000 Satoshis per dollar.
Mm.
So it's the purest type of Bitcoin exchange where we're buying and selling the dollar forwards contract. And if you buy the dollar at 1,000, that means you're shorting Bitcoin. So, and if you short the dollar, it means you're buying Bitcoin. So let's say I think Bitcoin's going from 100,000 down to 50,000. So I buy the dollar at $1,000, right?
1,000 Satoshis.
1,000 Satoshis per dollar. If it goes up a tick, I make one Satoshi.
Mm.
If Bitcoin drops to 50,000, I sell it at 2,000, right? Now I just doubled my Bitcoin. So what I just did was I started with $100,000 and I ended with $100,000. This is called hedging, right?
Mm.
So we are building a pure forwards exchange for hedging or speculating on the US dollar price. Yeah, it's even hard to explain it. So everybody else, what they do is they invert it, right? And we will eventually invert it, but turns out the AI agents don't need the inversion. The AI agents are cool with it. They're like, oh, this is so clean because every tick is the same amount.
Mm.
It's a linear tick size. Anyway, so back to your question, we consider ourselves a Bitcoin layer two. We're using Bitcoin. Um, the money only sits in your wallet. It goes from your wallet back to your wallet. The profits go back to your wallet, right? And you're using your Bitcoin keys to sign messages in this new network. So we have some in some instances it's a layer one, in some instances a layer two, in some instances a layer three. But we have a network of nodes that are each node could have the matching engine on it, and every second we come to consensus, and then everything is deterministic. So we use Bitcoin as like the database of accounts, and then we sign messages, and at the end of the day, If you unlock, you sign a message to unlock, then the money comes back into your Bitcoin account and you're out and you exit the exchange.
Wow.
Yeah.
So where does the decentralized, the DLOB,
The decentralized limit order
limit
book.
order book,
Yes.
where does that come in?
Okay. So basically, instead of having a single location where the matching engine sits,
Hmm.
everybody gets all the orders before they get matched, right?
Okay.
So every node has the matching engine inside. Okay. So basically, you send this. You say you sign a transaction says buy one at 1,000, right? Everyone sees it, and then at the end of the second, there's an epoch event. We take all the transactions that exist and we put it into a block deterministically, right? So there's no one deciding on the block. Everything goes into the block, right?
Okay.
That's the first step. That gets locked.
Mhm.
Now, how do you process that block? What happened first? So we admit that nobody knows what happened first. In the world that we live in physics, there's no answer to that question, what happened first, right? Nobody knows, right?
Right.
You could say what I saw first, but what did you see first? We both saw something else first. So instead of trying to come up with so what they do in Bitcoin and what they do in Ethereum, we're going to choose some random person to decide what happened first. And that turns out that random person is one of my people I'm playing poker with. He gets to see the cards. What? That's not fair.
Mm.
So instead, we just auction it off. So we auction off the ordering of events, and at the end, so now that second's up, the next second's happening, right? And one of those transaction type is called an auction, and the winner gets to seed that block, and then it goes in, and at that point, it's a regular order book like Coinbase. So from 1 to 2 seconds, we have this chaotic mess. And inside, so what we say is, we know you could do high frequency trading if you're first. We know you could do MEV. Why don't we just not do it? We don't have to actually do it. We could all know that we could all do it because it's easy to do if you're first. So now anyone could be first. Just have to pay for it. And then it turns out what really happens at the end of the day, those that have a speculative position on the price win, because you can't just be doing arbitrage because you may not get it because it's an auction.
Right.
So you all of a sudden you may be long or short Bitcoin. So those that actually wanted to short Bitcoin now have an advantage. So we took the advantage, the physical advantage, and gave it to the guys that could predict price. And that's the original purpose of exchange.
Right.
Yeah.
Fascinating.
Yeah.
Okay, and so what does this trading app actually look like?
Right now you go to Sidepit.com, it's there. It looks like every other professional exchange, although the prices are inverted. So 100 million divided, right? It looks like 1,000 instead of 100,000, right? That may change soon. And you put in, we're trading $500 at a clip. So it's $500 contracts. And you connect your wallet. So it feels like DeFi. So from
Interesting.
Ethereum people, they'll be like, oh, what's the big deal? But for Bitcoin, it's just like, we've never seen anything like this because we don't
Interesting.
have smart contract. It feels and acts like DeFi. There's a wallet, connect your wallet. We use Unisat.
Interesting.
But it actually acts, the performance and the type of exchange is more like a centralized exchange. So we're actually bridging two worlds.
Wow.
And we're saying that we have the first decentralized price discovery, we're decentralizing the matching price discovery. So we don't have to, and we do have like this whole trust, so we're actually punting the part of the trust to like whatever's the best inventions that are coming out of the space to solve that problem from side chains. So the other side is the side chain. So Sidepit, so Bitcoin side chains, right? They've been trying to build these for a long time, and there's all these trust assumptions. So we say, hey, whatever the best technology that comes out, we could plug that in. But we're focused right now. So we launched the first ever implementation of the DLOB. We're starting with Bitcoin. Why Bitcoin? Well, it's the most volatile asset. It has deep liquidity, right? And it's a fundamental software engineering feat. So it's like really aligned with the
Right.
whole story of Bitcoin. But once we prove it here, we have an opportunity to go back to TradFi and finally fix the problem that actually a law, NBBO it's called. Anyway, they made a law to try to make it more fair. And they said within 1 second you have to do X, Y, and Z. So like anytime you add within a second inside a distributed network, what does that even mean?
Right.
Within a second, like who's gonna tell? Like
Yeah.
it's an impossibility, right?
In terms of like beginners and people that are still getting into DeFi, TradeFi, getting into crypto, is this is your platform conducive for that?
Yes, well, it depends. So if you're a coder, um, like we're really gonna start educating a lot of people looking for jobs, and it's been really rough out there. So we're gonna have these APIs, and with C++, and we're gonna try to have this agentic API. So have like our focus is ground. One of our focuses is ground floor, bringing these developers up to speed and enabling them to code to our APIs, and eventually maybe hooking up with some trading group. That's a if you don't have any trading experience, you have to want to try to beat the market, right? So it's not like you have to want to try to beat the market, or else we say don't try,
Right.
right?
Right.
Because you're not going. Even if you want to try, you're still gonna, you're up against, think of it like a professional poker game, right?
Yep.
And you're new. So yeah, if you plan on sticking around, yes, you could learn. It's very simple once you get the hang of it. The difference between us is there's a little education, and that's, remember I said earlier, is the better the UX, that the better the experience is immediately,
Mm.
right? The more manipulation there is,
Right.
right?
Right.
So you just have to get to a certain point, and then it's simple. Like every tick is the same. But if you have Bitcoin, you could, within 24 hours, you could start trading. It's a small amount. But yeah, we do plan on doing the whole DeFi thing eventually, maybe points, systems, and all that. It's in the cards. Yeah.
Amazing. Where do you see the future of Sidepit going in 5 years and 10 years?
Let's see. Yeah. So the future of Sidepit. Yeah, we see, by 2030, we want our technology to be, a core piece, like maybe even a lower level. There's a $14 trillion exchange market out there, that have been dealing with these inefficiencies for many, many years. So we see SciPit as, bringing stability to financial markets, in various ways, enabling infrastructure for larger institutions to adopt Bitcoin, for example, and just bringing this core idea that speculation is not bad. It's actually a public good, and we need some people out there to create this environment of price discovery to bring everything back. And what I want to be known for is, finally, piece of technology that came out of the space that's actually solving a real problem, because the normies out there, they've been saying, "Can we see something?" And they
Right.
haven't seen it yet. So hopefully this is it. And they get the other side of it, they get the HFT side of it.
Right.
You know.
So who are you doing this for?
Oh, that's a great question. When I was at one point, I was a consultant helping these traders, right? Some of them were coming out of the trading pits. And hedge funds would hire me to code their brains, to try to automate stuff, right? This is right before that book came out, Flash Boys. So I saw these top traders, people that were killing it manually trading, and I was trying to help them automate it. And we couldn't figure out what was going on. Why wasn't it working? So on one hand, we couldn't like do the AI stuff, like trying to code something like, is the market going up? That wasn't possible 10 years ago, but now you could. But even worse, we ran into this, which was unknown then, the advantage of speed, right? And those guys, that whole industry, that whole group, right? They kind of lost the ability to make a living from speculation. And yeah, I'd like to bring it back because I thought, it was something I've been trying to do for many, many years, and those guys deserve it. So I want to bring back that idea of you don't need to be have special access, and that's the whole Bitcoin Satoshi thing, where the code itself, the software itself, solves a fundamental problem for the people all over the world without having, centralized access to unfair
Yeah.
advantages.
You're enabling Satoshi's vision.
Right, that's exactly right.
Do you have any advice for beginners that are looking to get into the decentralized space and learn about decentralized finance?
For beginners, okay, I would say that there are some things that are really fundamentally sound, like NFTs and you know certain protocols, and others.
NFTs are fundamentally sound.
Yes,
Okay.
NFTs are fundamentally sound
Okay.
because there's a right. It's funny, and if there's a subset of protocols that work and a subset that don't work, right?
Okay.
Anytime you have multi-party game where the miner could be involved, right? It gets breaks. But NFTs are single one-offs, right? That's why it's so funny. That's why they became so big, because there's only one of them. Well, right? It's non-fungible. So there's
Right.
one of them. It's
Right.
art. It's a one-on-one deal, right? When you get into fungible and you get into things like that, it becomes so. For example, if you think of it like this, here's my example. Let's say you're playing rock, paper, scissors for money. Okay.
Yeah.
Imagine betting on rock on the blockchain, or just I go first. I'm gonna bet on rock. What's your move, right?
I mean, do I know your
Yeah, you know my move.
paper?
Right. Why would I do that? Why would I bet on it?
Right.
That's that's the obfuscation. So that rock, paper, scissors game that I'm betting on here, it's happening in the blockchain over and over again, but it's obfuscated by all this complexity, right? So I would never bet on it. So you have to say, what are you betting on? And is it rock, paper, scissors? If someone sees what you're doing, can they manipulate it, right? So those type of games, right? They're just not appropriate, right? They're not appropriate for asynchronous communication. And that's the best way I could say it. But at the end of the day, like, learn the computer science behind it, and now I guess maybe learn the AI behind it, and also game theory. So there are some things that just work, even though they shouldn't work. Actually, Bitcoin itself, right? It works because the people there's an idea of community, and I don't take this notion that it's everyone's like against each other. It's not money for your enemies. It's money for a community. Decentralized means a consensus of the people that want something to happen, and they make it happen, right? I would say walking into Starbucks, and when you pay for your coffee, the fact that you get it afterwards is game theory. They could just say, "Oh, what?" If Starbucks was a blockchain, Bitcoiners would be like, "Well, how do you know you're going to get your coffee? What if they just run away with your money and not give you your coffee?" Right? They
Right.
could,
Right.
but they don't. Even though they could, they never have and they never will. Right? So if you could create a protocol that people are just not going to do the thing that they could do, then you win. And that's how we get to that next level here with this decentralized stuff, is
Fascinating.
getting the humans on the same page.
Wow. And so, I mean, I'm just curious, but in terms of game theory, is this something that you recommend someone to study, or is just like how? Because it seems like it's a pretty big
Yeah,
part of
game
this.
theory is. I mean, people think that Beautiful Mind guy was Satoshi. What's his name? John Nash.
Interesting.
No, people think he was Satoshi.
Just
Right?
like that.
Yeah, because he died at the same time Satoshi was missing. Yeah, so there is a movement now. Actually, I would recommend looking into that. There's this intent centric movement within, like, on the edges of like the most sophisticated stuff in the space, called Intense, I think. And that kind of like really lays into the game theory stuff and incentives. And if you read Satoshi's paper, it's a lot of it is game theory and incentives. The whole mining thing is a game theory and incentives. I would love if the space got a little less rigid on the technical, a little more on the spiritual, like coming together and doing something the way we want to do. But Twitter doesn't seem to help. I don't know.
I'm sure. Okay.
Yeah,
Well, I think this was great.
yeah,
Thank you. I learned a lot from this conversation,
me
and
too.
it's going to get me back into the space a little bit more.
Yeah.
I appreciate the time. Thank you so
Oh,
much,
thank
Jay.
you so much.
Hey, what's up?
This is
But
Zach.
it's not something Genzio is afraid of.
If you want to survive, you got to build a
How
hive.
many know we do not understand that we do not want to have? Ladies and gentlemen,
Get back at the Genzio Media House.
Awesome. Thanks so much for joining us today.